What is up, my Forex for Beginners family? Okay, so today we're going to cover a much awaited lesson. I know some students have been asking about it. Fundamental analysis. I waited this long to get into this because I wanted you guys to really fall in love with the charts and really understand what trading is about. And trading is about chart analysis. So everything I've been teaching you, when we're looking at, price charts and we're looking at the price and we're looking at the date and we're looking at trend lines and channels and, support and resistance, exponential moving averages, that all falls into the category of technical analysis. So I haven't labeled it or told you that what we've been doing was technical analysis. When we're looking at the charts, that is technical analysis. We're using the tools that I taught you to come up with a technical analysis based on price movement and volume of traders and what people are doing in terms of chart analysis. So that's what technical analysis is. So everything we've been doing up until this point has been technical analysis. And now we're going to talk a little bit about fundamental analysis because it's an important thing to know. So you're going to require you to do a lot of Googling. And what I did was I Googled fundamental analysis, and let's see what it said. Fundamental analysis in accounting and finances is the analysis of a business's financial statement, health, and competitors and market. It also considers the overall state of the economy and factors including interest rates, production, earnings, employment, GDP, housing, manufacturing, and management. So basically what this is telling you is that fundamental analysis has to do with the economy, has to do with interest rates, production, earnings, employment, housing, all these things. And what are all these things telling you? They're telling me that these sound like reports and data and earnings reports, how many people are employed, interest rates. These are actual hard numbers and data that's being released by the economy. So fundamental analysis has to do with a lot of reports. And I'm going to teach you how to find these reports and how to interpret them and what these reports tell you. You're going to have to try to judge which way the currency is going to move. So again, technical analysis has to do with all the tools and lessons I've been teaching you. And now fundamental analysis has to do with these economic reports. And I'm going to show you how to find these reports in this lesson. Okay, so first of all, you can see recently we've this is the Australian dollar versus US dollar. We just skyrocketed in the last, this happened like in 2 days. And I think this is a good opportunity for me to teach you fundamental analysis. So there was actually a lot of fundamentals that resulted in this increase here. So what I first want you to do is, I'm going to delete this now. I'm going to just work on one chart because right now some of you may not be using the 3-chart setup. So I'm just going to expand this to one chart. And so what I want you to do is up here in your bars, this little bar menu here, I want you to find the one that says with the little plus sign here, and it says compare or add a symbol. So when you click on that, I want you to type in DXY. So DXY stands for US dollar index. So what this index does is it compares the US dollar to all the other currencies in the world, and then it graphs it, right? And we can just add a little text here and write in US dollar index. So what this is doing is it's comparing the US dollar to the rest of the world's, all the other dollars, and then it kind of graphs it. So what I like to do is when I add the US dollar index here, I like to just draw a nice little trend line. We've all learned how to draw trend lines. So this just shows you, one second here. This just shows you, so like I'm just joining this point here, this point here, this point here, just like I've taught you how to draw trend lines. So as you can see, the US dollar has been dropping. And as you can see, when the US dollar drops, Australian dollar versus the US dollar goes up. So as the US dollar gets weaker, we see Australian dollar versus the US dollar go up. So let's just review what it means by Australian dollar versus the US dollar. So when you're looking at the Australian dollar versus the US dollar, that's telling you that 1 Australian dollar is worth how much US dollar. So 1 Australian dollar is worth, if the price was here, it's worth 70 cents US dollar. So if 1 Australian dollar is worth 70 cents USD, that's telling you that the Australian dollar is actually a weaker currency than the US dollar. So if I had 1 Australian dollar and I went to visit the United States and I exchanged my money, I would only get 70 cents US dollar because the US dollar is stronger than the Australian dollar. So that's how you read that chart. So as you can see here, as on the US dollar index, as price is dropping, that's telling me the US dollar is getting weaker. So that's why if we look up here, the Australian dollar versus the US dollar, if I had 1 Australian dollar and the US dollar is getting weaker, that means I'm going to get for more US dollar for that 1 Australian dollar. So that's why you see prices going up, because as the US dollar weakens, that means 1 Australian dollar will have more buying power. So I'll get more US dollar from my 1 Australian dollar because the dollar index is dropping. And I'm going to go into what causes the dollar index to fall. And that all has to do with the economy and what's going on in interest rates and jobs and unemployment and housing. All of that affects the US dollar index. And that's what we call fundamental analysis. So this is how we add it to your chart. So this is step 1. You want to be aware of the US dollar index. You can also, what I suggest doing is, if you go in here, you can just add DXY, and you'll get the US dollar index. And if you click on it, it'll save it somewhere in here, and then you can just click and drag it. I dragged it up here. So you can actually click on the US dollar index, and then you can minimize this. This will stay on your chart. If you want to get rid of it, you can hit this dollar index, because right now we're looking at the dollar index. This is line chart. It displays in line chart, and then this is actual candlesticks. So just for the future, if you ever want to get rid of this, you can hit the X, or you can just double click on your chart and it'll toggle this on and off. So let me just quickly go back to Australian dollar. If you want to toggle it on and off, if you're using the 3 chart setup, you can toggle it on and off like this. So you can have it, you can have everything nicely displayed. And if you want to do a quick check on what's happening with the dollar index, you can just double click on your chart. So all I'm doing is right here, I'm double clicking, and it toggles that on and off. Also, I want to teach you guys just really quick, everyone that's using the 3 chart setup, you can click here, and you can also, I've taught you to have symbols and crosshairs selected, but you can also go click on time. So if you have your link button on here, and if you highlight just a quick circle here, it'll automatically move all the charts if you want that to happen. So it's a feature that you can practice using that, but That's for the people using 3-chart setup, but for now I'm just going to have that turned off. Okay, so going back to the dollar index. So what does this all mean? So how do we examine what causes the US dollar index to fluctuate? And that's what we're going to examine, and that has to do with fundamental analysis. Okay, so on your charts, you should have news displayed. If you don't, I want you to right-click on your chart with your mouse and then go to Settings and then go to Events and then make sure it says Show Economic Events on your chart. So if you click on that, boom, you get these. These are economic events, and this has to do with fundamental analysis. So all of these, you know, maybe some of you are wondering, well, what does all this mean? You know, previously I told you guys just to stay away from news events, let the news play out, and then what we do is we jump on the trend after news has been released. So when these reports are coming out, this is when the big banks are in the market. You know, they cause price to fluctuate. The banks really are the, you know, they're the mafia. You know, you know, like the drug cartel or whatever you want, a big, you know, corrupt / legit organizations, you know, however you view the banks of the world who control the economy, you know, they're the ones that push price in the direction they want, you know. And that's what I've told you guys to, you know, I've told you guys to stay out of the market when news events are being released, because that's when the big players are in the market. And in order for them to cause big swings or move the market a certain way, which they have the power, they have huge buying power. So the banks control how, you know, the markets move and which direction they want to push it. And, you know, they release all these reports, and, you know, they're making decisions that affect the dollar, and they essentially are the major drivers of price, you know, that we examine on the price chart. So previously I've told you guys to stay away from news events, because when you have a small account and we have, you know, wild fluctuations in the market, you're just going to have your stop loss hit. You're going to get knocked out of the market. You're going to lose money, and you're going to, you know, you're going to kind of be upset. And I didn't want you guys to get discouraged from trading. So that's why initially throughout the training, I've told you just to stay away from these news events. I told you how to show them on your charts and just kind of avoid them. And after the news event has played out, you can kind of jump on the trend, and that's when, you know, our technical analysis comes to play. After the banks have moved the market where they want to move it, then we jump in after and ride the wave. So that's what I've been teaching you guys, to just ride the wave. You know, the trend is your friend, but I don't want you guys to be blind about what fundamental analysis is. So now that we have economic events or news events shown on our charts, now the question is, well, what does all this mean? You know, like, let me find one here. This is US news, like monthly home prices, and, you know, let me try to find a important one here. You know, usually interest rates, you know, job reports, those are the major ones that we want to look out for. So anyway, so yeah, right there, initial jobless claims, like all of these things, these are the big movers. And see how it's color coded, like orange, light orange. Really the ones you want to watch out for are the ones that are red. So I don't see any red in the market right now. So what I want you to do is go to Google, and I want you to type in Forex calendar. All right, Forex calendar. So there's a lot of different calendars. You know, they also call them economic calendars. You can go through all of these and pick out your favorite. But for this example, we're going to use Forex Factory Forex calendar. So I've already opened it up here. So once you're here, you can, I don't know what the home page, this is probably what the home page looks like, but I want you to go up here where it says calendar. So here, what are we looking at? So if you go over here and type in to filters, you can have different filters you want to select. So normally it'll have all currencies displayed, and it'll have, these are the different levels. They color code them. Red is very high impact news. High impact news means price is going to fluctuate. It's really going to push the market, right? And then, as it goes orange, yellow, the news becomes less important and it has less of a fluctuation. So just to simplify this, I'm going to have you guys just, for now, in this example, I'm just going to focus on the high impact news, because I'll be able to show you easier how it affects news, or affects price, I should say. So I'm just going to select this as on, and I'm going to uncheck all of these. And since we're studying the Australian dollar, I'm going to select Australian dollar, and I'm going to select US dollar, and then I'm going to hit apply filter. So here it shows me this week, for Sunday, what's the date today? Today is the 21st. So it's showing me this week's high impact news, and Trump speaking is one of these high impact news. Let me let me load more on the calendar here. So let me go and hit apply here. So here it, I increase. That's how you can increase the date range, and then just hit apply, and it'll show you more news. So from June 1st, what I want you to look out for is the first of every month, on the first Friday of every month, we have this release news report. It's called a non-farm payroll change. So this is a huge news event for the US. So first Friday of every month, we have this report. And because of the coronavirus right now, we're seeing huge job losses and people going on unemployment, and that all affects the US dollar, right? People don't have jobs, these are all economic factors. So I'm going to go into detail about that now, but I want you to look out for, this is a major one, job reports. It's called non-farm employment change, but it's about jobs. So, people that follow oil, these are oil reports that are, released. There's, let me see what else. Interest rates. Interest rates are another huge FOMC statement. So these are the federal funds rate. Like these are high impact. These are important people talking about what their predictions are, or what they're going to set the interest rates at. And interest rates, again, affect the dollar. When the interest rates are high, people like investing in certain assets, and then when interest rates are low, people invest in other things. So all these reports, interest rates, jobs, housing, all of these things affect. So now that we're gonna let's focus on for example, non-farm payroll. So so back to this chart here. So when you see news events, if you want to say like mortgage rates, or say something comes up here, so you see something here on your chart, you're like, okay, there's some news event coming up. All you do is go to Forex Factory, or whichever Forex calendar you want, and you look up the date. So on here, it shows you that these reports are coming out on 21st of July. So you want to go to that specific date, look up what news is coming out, and then you click on Open Details. So for this example, let's look at the first Friday of June 5th, and that's a non-farm payroll. And if you click right here, it's going to give you the details. So it shows you also the history. So it shows you the history. These forecasts is what they're forecasting, whether there's going to be job losses or job gains. So when there's a positive number, these are job gains. When it's a negative number, these are job losses. And then it shows you what the previous month was. And then when the news is released, that's what it means by actual. So when you click on, we clicked on this little folder that said details. Here, it tells you more information. It says usual effect, actual. So when this actual data comes out, this is actual greater than forecast is good for the currency. So that means if they're predicting, 20, here I think is 22 million job losses because of the coronavirus, they're predicting that, but we only had 20 million job losses. That's still huge, but we're going to examine on the charts what actually happened. But this is what fundamental analysis is. So basically, you go to your charts, you're aware of news being released, and then you go to your favorite calendar, Forex calendar, and you look up that report, and then you read about it. You read about what's going to happen, and you want to know what time the report's going to come out. And this is why I said to avoid, this unemployment or non-farm payroll reports. They're high impact news. It causes big fluctuations in price. That's why I've always told students to stay away from news releases. But again, we want to be aware of what's going on. So let's look up one of these reports. So May 8th. So let's go back to May 8th and let's examine May 8th. So I'm going to double click this. I just want to look at the dollar index. So I'm going to go right here, DXY. I'm going to bring up the dollar index chart and I'm going to set it to, let me see, I'm going to set it to daily, the daily chart. And let's go back to Forex Factory. It says, so May 8th. May 8th, there was a release. So let's go back and let's try to find May 8th. So this is what fundamental analysis is. So April, so I'm looking down here and it's giving me a date. So April, right here, May 8th. So something happened around here. So I'm just going to highlight it. I'm going to go to my 1 hour chart. I'm going to try to find that spot again right here. And boom, look at this. I already know where the news release happened. Right here. See this? And they release it right before Friday. So if you, Friday evening. So see how it says May 8th at the bottom there? And then the next, if I move it over, it's the 10th of May. So that's the weekend. This gap right here was the weekend. They like to release these news reports, especially this one. And this was the non-farm employment, so the employment change. So this was released on May 8th. They were forecasting 22 million job losses, and the result was 20 million job losses. So they colored it green. So yes, here it says actual, if actual is greater than forecast, is good for the currency. So that you think that, since we had less job losses than predicted, that you would think that the US dollar or the US dollar index will go up. Well, yes, it's green because it's lower than forecast, but COVID-19 resulted in still 20 million job losses. That's not a good thing. So if someone was like, okay, well, they forecasted 22 million, we only had 20 million job losses, I'm going to buy the US dollar. Well, look what happened. Price dropped really quickly and really fast. And if you were buying, trying to trade a news release, well, you would have been severely hit negatively because you were trying to buy based on news reports. You're like, well, it says here that, actual forecast, if it's, lower, that's good, price should have went up. But, in reality, we still have 20 million job losses, and that caused the US dollar index to drop. So let me try to maybe go to the 30-minute chart, see if I can still find that. Okay, right there. So you can see, it quickly dropped. This is why we avoid news. It's kind of unpredictable, and you could severely damage your account if you don't have, a large account. So this is exactly the reason why I said to stay away from news reports. But that doesn't say that you shouldn't be aware of the news reports, and because what I've been teaching you guys is, when I want you guys to follow the news, see what happens, and then a good opportunity would be after the news report is released and price flies around and then slowly settles down. Then you can say, hey, I see a influx of buyers coming in. Well, I'm gonna buy in this new trend after the news report. That's what I want you guys to take from this. I want you to see the news reports, know when it comes out, see how it affects price, and then join the trend. That's what we do. We join the trend. Okay, so let's pull up the Australian dollar versus the US dollar. Let's stick with this example we're using right now. So let's go look up May 8th, and I'm going to double click and show this is the DXY, the dollar index. So it's kind of overlaying the Australian dollar versus US dollar, and we've got the dollar index on the bottom here. So let's go look up, hopefully we can find it. I'm gonna go to 1 hour chart. Let's go find May 8th. Let's go find that. So here, looking at the dollar index, we can see on May 8th, we had this steep decline, but it was, right up before the markets closed. So we didn't see too bad of a movement on Australian dollars. So we had the markets close for Friday, and here in this example, we didn't see too much fluctuation on the Australian dollar versus the US dollar. But let's jump over to the most recent, and let me just hit reset on the chart. So back to what caused this initial, let's zoom in here. So right here, there've been a lot of news to do with the coronavirus. So the coronavirus, we've had a lot of vaccines testing going on, and they've had some positive news. So that's actually what caused the US dollar right here to temporarily drop. So as coronavirus news is getting better, so if we have some positive news for the coronavirus, we're seeing the US dollar drop. And to me initially, I was like, okay, well, why does the US dollar drop when there's positive news about the economy? You would think that vaccines being released or new testing approval for vaccines would be good for the US dollar. So it kind of didn't make sense to me initially. So again, we have to go to Google and do research. Fundamental analysis is about research. So, I Googled this report. I typed in why is the US dollar dropping when there's positive COVID-19 news. So let's just read this. There have been a few winners from the coronavirus crisis, but one stands out, the US dollar. As investors realized early this year that the size of the economic shock that COVID-19 would cause, they sold riskier assets like stocks and bonds. So people that had stocks in certain companies. Well, if people aren't working and these companies can't produce product and they're laying off people, well, those assets for investors become risky. So they're selling their stocks, okay, and said, okay, so let's continue reading. Taking safety in cash, but not just any cash. Investors all over the world wanted the US dollar. Demand for the dollar was so high that the US Federal Reserve set up new swap lines to lend dollar to other countries and central banks. So what I got from this is, okay, well, that makes sense that, when I see the US dollar getting stronger, that's because people are selling their stocks and bonds, and they're buying the US dollar because they see this as a safe haven. The US dollar, everyone wants the US dollar in the world, so it's what they call the safe haven. So people are selling off their stocks and they're buying the US dollar. And that's why during the COVID-19 start of the pandemic, let me just bring this up really quick. We saw, look at this. We saw a big increase. So let's look at the date. When let me just delete this right here. So during March, we saw a steep increase. Look at that, steep increase in the US dollar. People were buying the US dollar because they're like, okay, COVID-19 is taking a huge effect in our economy. It's causing people to lose jobs and companies aren't able to employ people. Well, let's start buying the US dollar to safeguard our money, because everyone wants the US dollar in the world. The US dollar is like the standard. And let's start dumping our stocks because these companies are laying off people. Obviously, the asset price of these stocks are going to go down. Everyone started buying the US dollar. So as the US dollar, people started buying this is the dollar index. As people started buying, you can see that the Australian dollar versus US dollar started going down. When the US dollar goes up, you get, if you have one Australian dollar, the value when the US dollar is increasing means you're going to get less US dollar for $1 Australian dollar. So again, one Australian dollar is worth how much US dollar. So as the dollar index is rising, if I was a tourist from Australia and I had $1 Australian, as the US dollar increases, how much in exchange for that one Australian dollar I get is going down. So that's how you interpret this. So as the US dollar increases, you're going to get less American dollar for that one Australian dollar. So I hope you understand that. That's how the exchange rate. So just think of it as if you were an Australian coming to the United States. I had one Australian dollar. As the coronavirus is hitting, the US dollar is increasing because people are buying the US dollar because they're ditching their stocks. That's why the Australian versus the US dollar went down, because for one Australian dollar, I'm getting less American dollars. Okay, so now that we're getting positive news about the coronavirus, so we're up here, now we're, the economy is starting to, the world is starting to assess the outcome or the result of all this stuff happening with the coronavirus. So around this time, we were doing a lockdown for a while, and then slowly the economy started opening up. People started going back to work. President Trump wanted everyone to go back to work. He's not so worried about the coronavirus, but we're still very early in the coronavirus and we're not sure exactly what's going on yet. But regardless, as people went back to work, well, people started selling their US dollar. As you can see, the US dollar is starting to drop. They're selling the US dollar and they're starting to buy other assets like stocks and bonds because people are going back to work. So they're like, okay, this is a good opportunity to buy stocks again because, stock prices have dropped because people weren't working and the economy was shut down. So let's start buying stocks again. So look what happens. As the effects of the COVID virus are diminishing, the US dollar starts weakening. And when the US dollar starts weakening, well, what happens? The Australian dollar versus US dollar starts going up. So again, what does this mean? So one Australian dollar is now worth more American dollars because the US dollar is weakening. So if I had one Australian dollar and the US dollar is going down, I will get in exchange more US dollars. So this bar on the right has to do with the US dollar. So 1 Australian dollar is now buying more US dollar because the US dollar down here is weakening. So I hope you understand that. As the US dollar goes up, or pardon me, as the US dollar goes down, Australian dollar, 1 Australian dollar is able to buy more American dollars. So this is how we compare the Australian dollar to the dollar index. So back to the most recent, what caused this most recent sharp decline, right? We just had a big drop in the US dollar. This had to do with right here. This had to do with we had a bunch of news releases recently about COVID-19 vaccines. They're getting approval and they're starting to do human testing. And they had a bunch of news releases yesterday. So what happened was the US dollar dropped really quickly because people are ditching the US dollar and investing in stocks and other assets because, positive news to do with the COVID-19 outbreak or pandemic, is causing people to sell the US dollar, which results in the Australian dollar versus the US dollar to increase. So this is why I advised you guys to, when we're doing the 3 chart setup, or you're doing just the single charts, depending on what part you're in the training modules right now, I always say to keep this dollar index on your charts here because, drawing a simple trend line like this, you can see when price for the dollar index comes up to this trend line, well, you can expect a bounce. Why? Because we've had a bounce here, a bounce here. When it bounces, price starts heading down. And when price starts heading down, that's when we can, it'll alert us to, hey, maybe it's time to look for buy opportunities here, right? And look what happened. We had a huge, buying opportunity here based on just by looking at the dollar index. The dollar index is dropping. It came up here and then it dropped really quickly. Well, it made for great buying opportunities in the Australian dollar versus US dollar market here. So this is why I absolutely love tracking the dollar index, because the dollar index, the US dollar index is the standard for the world. Everyone from foreign countries wants to buy and sell the US dollar, so it's very important for us to track what's going on with the US dollar. Okay, so let's go back to Forex Factory again. So let's find one other example here. Interest rates. Interest rates is a huge factor. So let me pull up more dates here. So let me see. So another important one. So I talked about the non-farm payroll that comes out Friday of every month. The first of every month is non-farm payroll. Another important one is the FOMC. They have press conferences or statements. The Fed announcements, these are all related. They all have to do with interest rates, and when they speak, it affects the price. So again, all you do is, you can, click on this and read about it. It says more hawkish than expected is good for the currency. Well, what the heck does hawkish mean? They use this term hawkish and dovish. They love to use animal comparisons in trading. So, like you've heard of bullish and bearish. Well, those are animals. Bulls versus bears. Bulls means to go up. Bears means to go down. Well, they're doing the same thing here. Hawkish means hawks, I guess they fly up, and, doves, they go to the ground. I don't know. But anyways, hawkish. So I looked up, again, if you don't understand anything, Google. You got to Google everything. Well, what the hell does hawkish mean? So let's read what it says here. A monetary policy stance is said to be hawkish if it forecasts future interest rates increase. Central banks can also be said to be hawkish when they are positive about the economic growth outlook and expect inflation to increase. Well, so we go back to Forex Factory. Here it says more hawkish than expected is good for the currency. So if the statements released by the feds are talking about interest rates increases, well, that's going to be good for the US dollar. So we could expect price or the US dollar to increase. So same thing, we would just go look up, you can look up these press release dates and you can go back to the dollar index and you can just cross-reference and see how price fluctuates. So I suggest you guys to do that. It's good to, just spend some time on DXY, the dollar index, right? Let me make it a big screen here. So you could even, go to the daily chart and, you can just do markups like we've taught you. You can draw trend lines. You can just follow what's happening with the US dollar, right? You just want to, be aware. So when the US dollar is, up here, it's at 102, well, it hasn't been that high in a while. So, when the US dollar is really high like this, you could be like, okay, well, I'm going to start being aware of possible opportunities on the Australian dollar versus the US dollar because we're very high. We're at record level highs based on the dollar index chart. And right now, look, we're approaching a really low point in historic values for the US dollar. And that's because everyone is selling the US dollar now because, they're getting some positive news about vaccines. But we're a long ways out of this. We have an enormous amount of people being infected by the coronavirus right now in the United States. They can't shut down the economy because, you shut down the economy, people aren't working. Well, people are going to die from not being able to feed their families. So you can't shut down the economy. But we also don't want to die from a virus. So, and vaccines are, at least a year away from being released. So again, it's troublesome news. But, what can we do? All we can do is, be aware and join the trend. So I'll give you one more example about this news release. Let's see if, let's look up this date here. So the last Fed announcement was, let's go with this this was April 30th. So let's go look up April 30th on the DXY. Let's see if it shows us any sort of fluctuations. Let's go to the the daily chart. And what date did I say? I said April 30th. So I'm looking down here at the date. So March, April, May, June. So April 25, April 30th. So again, look, they released it. I believe was that the middle of the week? I don't know. But anyways, I'm going to mark April 30th right here. April 30th. So April 30th was around there. I'm going to delete these. I'm going to go to maybe the 4-hour chart. And see if there was any, So I'm thinking I see a little gap here. April 30th. So April 30th was around here. So I'm not seeing any wild movements, but let's drop down to the 1-hour chart. And you can see So right there, you know, you can see that during this big candle right here, well, that was most likely, you know, some sort of news release. And this, you know, doesn't look too major here, but, you know, this is how news affects price. So you can, you know, go and spend your time researching this. You know, like I said, the major ones are interest rate releases, job reports. You know, when the President Trump speaks, that probably, you know, has another factor in price. So you can look up all these reports, go back based on the date, and look up how it may have affected the dollar index. And but I suggest using it how I taught you. I love just overlaying the dollar index on my Australian dollar versus US dollar chart. You know, it's the reason why I was able to catch this, you know, this big run here, because I saw this downtrend happening. You know, just draw a simple trend line. You know, here I made a touch there, I made a touch here, touch there, and then it touched there. So, you know, I was expecting a possible breakdown from here, and it took a little bit of news to do with vaccine releases to cause this big drop and a huge buying opportunity for us in the Australian dollar. So I wanted to suggest, so all of these high impact news, you can also, you know, just go and display all the news and apply filter. And basically they have a prediction, and then there's actual results when the data is released. And I also want you to, you know, spend time Googling. So I typed in here, how do jobs affect the dollar? And what did it say? Indeed, a strong dollar tends to weaken the economy, lowering inflation risk and putting downward pressure on interest rates. We can only conclude that strong employment reports, particularly payroll growth, drives up the dollar because it causes concurrent rise in short-term interest rates. So fundamental analysis is really just research and looking at reports and predictions, and then cross-referencing on the charts to see how it played out. So you can look up historic events, see how it played out, and using these reports and historic chart events and how it played out, we can make predictions on, you know, whether we're bullish or bearish. And that's how you use fundamental analysis. So it requires a lot of research, a lot of Googling, a lot of education. It's essentially you learning about the economy. Some of you may have taken Economics 101 in school. Essentially, you need to learn how all these different factors in the world, jobs, interest rates, inflation, all of these things, how do they affect the US dollar or whichever currency you're trading. And personally, I like to monitor just the US dollar index. I monitor interest rates and job reports, and that's about it. I don't really like diving into these documents too much. I just love being aware of when news is being released based on what I see on the charts, you know, right here. And then if I have something that interests me, I'll go do a bit of research. And I'll just kind of have an idea of which way price may go, and I'll just be looking for opportunities in the market. But like I said, what I've trained you guys to do is technical analysis. I just taught you how to join the trend and ride the wave, and that's the type of trader I am. And you have to decide what you are, what type of trader you are. And in upcoming lessons, I'm going to talk about, you know, a question about what type of trader are you? And if you're a day trader, if you're a scalper, if you're a swing trader, what does all this mean? And I'm going to be going over that soon. Okay, so I hope you enjoyed this lesson on fundamental analysis. It takes a bit of research and understanding reports. It's maybe not the funnest task, but it's definitely part of trading and being aware of what's going on in the world. Okay, thanks for watching. I'll talk to you soon.